Hi, this is Randy Finney with Right Side of the Chart, and this is an early to mid session update for Wednesday, January 28th, 2026. It is 11:18 a.m. Eastern Time. And what I'm going to do in this video is update the short trade ideas on the site. Um, just to kind of reiterate, or for those of you new to the site, the vast majority of trade ideas shared are in videos. Sometimes I'll cover a specific sector industry and then go over the components of that sector, at least the ones that stand out, share trade ideas that way. So I do my best to archive trades. So what we have are what I call these official trades. These are the ones where I get a screenshot of a chart out to you with marked price targets. I'll try to include stops on those and any additional notes on the trade, such as considerations for a downward or upward adjustment in position size based on the volatility, the risk, or whether or not I believe it's a full position or a scale in position at the time based on the charts. In other words, a scale in position might be I'm looking for multiple buy signals on something, several resistance levels overhead to be taken out. All right, so I'm going to dive in here. I'm going to tell you I'm going to cover the short trade ideas in this video. So I know there's some of you out there that may not short, maybe think it's anti-American or we're in a bull market. Why do you want to short? And as I often say, I keep a continual flow going of trade ideas on a lot of different asset classes: stocks, bonds, commodity, crypto. And then within the stock arena, you're going to have long, and with every asset class, I should say, whether it's different asset class, bonds, crypto, commodities, you're going to have long and short trade ideas. Basically, it's simple. The best looking charts, the most bullish charts are long trades. And those that, it's not just that. There's also a lot of little nuances that go into it. Let me just dive in here and get going. And again, if you're interested in any of these, if you're in these or want to participate, it's been a little while since I've updated. And I'll be honest with you, I haven't gone through some of these recently, so I may have to give an update as I go through the trade ideas. I'm going to move this screen away. You can see I'm sorting them by, well, let's just do it by date, sort it by date. And I'm not sure why that's coming there. I might have marked that incorrectly. Silver. Oh, yeah, that's, of course, a short trade idea. All right, I'm going to move this away. I'll go through in order, and that's it. And then I'll do the long trade ideas in the next video. So nothing has changed on my outlook, whether or not that's going to happen or not, for the broad market, and that is this trading range I've been highlighting. This is the NASDAQ 100, very similar in magnitude, meaning from top to bottom, and also in scope, or the duration of the range. We've been moving sideways. We had a marginal new, popped, made a marginal new and still divergent high, and then broke down to the bottom, as was the expectation. That's what's the biggest correction in years right there, and we were able to profit from gain the bulk of it, and then cover those shorts right there on the day they bottomed. I think it was Monday, April 7th. I'm trying to recall the exact date. Either way, I expect the same thing here. And whether or not we make a marginal new high or not. And marginal new high is relative to the price scaling or the moves on the chart you're talking about. Marginal will be 3 to 5%, no more than that, or less. Again, you can just pop it. All right, but I'm doing this video. I think the time is right now. As I've said yesterday in the video, if of all known catalysts, again, there may be, a black swan is an unknown event that comes out of nowhere that can't be predicted. But of all known catalysts, so we'll call this a gray swan or even a white swan, however you want to call it, that can trigger this a breakdown down below and then through this trading range and take us to that T2 target. I can think of nothing more than what we have on the deck this week, which is the Fed today, 3 of the market-leading Mag 8 stocks today, followed by Apple tomorrow. So you're going to have half of the Mag 8 stocks reporting in the next little over 24 hours. You're going to wait till after the close tomorrow, plus a Fed meeting. And we all know the Fed's not going to do anything, but it's what they say matters. So, all right, let's just dive into the chart. So that's still, continuation of this trade. We hit my first target there. We covered for all the reasons stated back then. And we need to now break T1 And again, I've been harping on it forever and a day. The October 10th lows, it was a key low in the S&P and NASDAQ 100. It was also T1, not by mere coincidence, first target because I thought it was good support. So that's it. To try to quantify it for you, if it happens, it's going to be about a 12% drop from where we're at right now. And my expectation is it'll probably, because of the downward momentum, this is the only way I can describe the market right now, foaming at the mouth bullish market. Again, it's not just price action stalled out, but it's the analysts of one after another. I'm just reading this. You can't find a bear right now. They've left the building. So, and look, guys, again, I'm going to do the longs in the next update. We've been firing on most cylinders on the long trade ideas. And believe it or not, and this is what I'm going to go through here, a lot of these short trades have been playing out. They're already profitable, and there's more potential. I'm looking at a few today that are ready to break. A couple, actually, one at least I know was already broken. So again, this is what I like to do: spread my bets, especially in a trading range, and just be long the most bullish, short the most bearish. There's nobody that can tell you with 100% certainty which way the stock market's going to go, but I can tell you with a high degree of confidence which way individual stocks are going to go. And that works especially well in a trading range. And I truly believe in my heart of hearts, 2026 is going to be a stock picker's market, not a buy and hold market. So that takeaway there, if correct, we should vastly outperform the trade ideas on the site collectively should vastly outperform the stock market. Okie doke. Let's dive into the charts. So there it is. That's QQQ, SPY. I'm just going to go over the indexes real quick. SPY is eking out that marginal new and still divergent high. No change there, right? Just like it did back here. That was a marginal new and still divergent high. Market was cheering it. Bulls were cheering that. And then it failed and it didn't look back. Once the breakout failed, we went back down into the trading range, down through it. Do not pass go. Don't, go to jail, monopoly thing, pass go. Do not pass go. Do not click 200, whatever that whole saying is. And that's the rest was history. So that's the way I'm leaning towards. And I'm going to, hopefully I'll cover the VIX at the end here. I'm going to try to make a mental note to cover that. But I think the VIX offers a really nice RR, meaning the upside potential should any or most of the FANGs or the Fed disappoint the market in any way, then you have, I think, a tremendous amount more upside potential very fast in the VIX than you do downside because we're at the bottom end of the trading range. And so I'll just hit on it real quick otherwise because it's kind of relevant to short trades. So this is the VIX, and you can see we're at different points in times. It has different low ends of the range, but this is a support level. Recently, we had two whipsaws down through there, two drops below this support level right here, the 1463. Both of them with divergent lows and whipsaws, false breakdowns. That one was followed by a 390% pop in the VIX. And this one, as I've covered recently, we had this uptrend line right here and that key 1463 support, which again has defined support since this point right here, about August of 2024. We also had another whipsaw. As I often say, fewer things in investing are more bullish than a failed breakdown. Why? Because it sucks in short sellers and then they get roasted once they see the breakdown failed. They start to cover and again, you have bulls that jump in there. Either way, it is the technicals. They are what they are. Highlighted this. I've highlighted all these divergent lows, and including this one, and this is it. And the VIX has been moving up. So you have to ask yourself, okay, stock market, S&P's punching all-time highs. Most market pundits are very bullish right now because this whole sector rotation thing, they see that as a healthy sign. I do acknowledge that point of view. We'll see if it plans out or if it's just that terminal lucidity thing I talked about. That's it. But we can see the VIX has woken up again, and you got to be careful on the not telling anyone to short it, but again, it's downside. Look, if the fangs hit the cover off the ball, hit it out of the park. Fed market likes what the Fed is selling. Yeah, here's your downside in the VIX. I'm going to quantify it for you. there's no guarantee, but that's the low end of the VIX. That's the extreme that it's hit in recent years. It's about 28% downside versus my targets. Where are we at? Did I do that right? Okay, here's where we're at right now. 29, 30%, we'll call it. And that's just it's not even my final target, 260%. So see, this is what I'm talking about, RR, risk reward. If the party really gets started, it's not, could easily see the VIX going up here. That's 433%. All right. And again, on the weekly chart that I just toggled to, a couple, not many. This is going back decades here, and before the financial crisis, you don't get many divergent lows in the VIX. And when you do, she likes to run. All right, let's get back to the charts. I'll rifle through these as quick as I can in the order I just showed you. Again, you can go to the site Active Trade Ideas and Active Trade Shorts. And silver, no change there. In fact, ZSL is the one I use. It's gone parabolic. This is not my long-term chart. That's the one that I'm waiting to see that parabolic uptrend line break. And I still like it. I think we're still profitable, right? ZSL, where do we enter that one? We took it right at the lows 2 days ago, and we're right there. We're right at the entry price. I think it was 163. So we're still we're flat on that trade. Let's no update to give you on a trade that hasn't gone anywhere yet, but it certainly hasn't exceeded even the minimal stop for the smallest price target. What did I give that to you on 60-minute chart? Yeah, sure did. All right. So there it is. And then you calculate, depending on what you're going for. Are you going for the prize, I call it? Or are you going for the quick pop for a gap backfill? You get that. Keep in mind, guys, if and when this trade, whether it goes a little lower first or not, starts to head up and hit my first or second target, especially if it takes that out, you're most likely going to have broken that parabolic uptrend line, triggering a much more powerful longer-term sell signal. So keep that in mind, that it just works this way. It's pretty simple, but I believe it to be very true. If and as each target is hit and taken out, it just sharply increases the odds you're going to go up to the next one, because this is both a pullback trade, but there really haven't been many pullbacks. We did get the last one in silver a few months back, but more of a potential topping call. So we'll see. Big profit potential. And again, you use stops that are commensurate with your risk tolerance, assuming you even took it. All right, I had QQQ on there. I already covered QQQ in the beginning. This is what it looks like on the 60-minute chart. See that divergence we have? We're just moving the needle here. Divergence continues to build. That was a divergent high. This is a divergent high. I just showed it to you on the daily chart. Any marginal new high, there's your previous high. Equal or marginal new high, still divergent high. Again, that shows through on the weekly. For futures traders, let me just give you a quick update there. This is what my 60-minute chart right here, hourly candles, 3 months of trading history in NQ. Wash, rinse, repeat. We had a divergent high right there, one there, one there, one there, one there. This one's a bigger one, really, that shows through, again, carries through on the daily chart, more so than the 60. But you can also, as I just drew it there, show you that it still is a divergent high there. So we'll see if that divergence pans out. What you need to do is break this trend line. As I often say, take breakouts, be they bullish or bearish, with a big grain of salt heading into earnings, because you tend to get more whipsaws. But, I already commented that yesterday. I did the video where I kind of call what's going to go up or down after earnings. And, we have a lot of check marks on the FANGs. The majority of those have given me at least some decent check marks already. And so therefore, I expect we break this trend line and go down. And then ultimately, again, once we exit this big slop and chop trading range, then we're going to probably, if that happens, of course, if we break down below, we'll go down and most likely hit my T2 on the daily chart. For you S&P 500 traders, and again, I'm watching the S&P very close, as close as I'm watching the NASDAQ 100, because this is, providing all the cheer for the market right now. And again, you can see here, this is I went on this one 2-hour candles. So instead of 60-minute candles, they're 120-minute, and it lets me go back 6 months. Divergent high, divergent high, divergent high, divergent high, divergent low, which is bullish, divergent high, divergent high, divergent high. Drop, 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 drop. Again, these are corrections, and mostly if I zoom a little farther, again, this high is just barely above the high many months ago. This is just the tail end of this trading range, which spans over 6 months. Keep that in mind. But there it is, divergent high, divergent high. We had a sell signal there with the break of that trend line right there, and kickback rally, and this is the current trend line. So I just showed you one to get away from the indexes here, move forward. I showed you that one on QQQ, comparable trend line. So once that breaks, that should trigger the next correction, and you can see this divergence just grows bigger and bigger and bigger on the 120-minute chart right here. So that's what leads me to believe the most likely probability following this flurry of earnings that we're going to have today and tomorrow, and the Fed meeting will be most likely to the downside. But if so, again, indexes are one of many trades. That's where I'm going over the individual stocks now. So next one up I had there is the Russell 2000, i.e. the smallies or small caps. We have a recent trade on this too, current trade. These are, trend lines. This is my 6-month, 2-hour candles, 120-minute chart. Big divergences, just like the S&P building. As smallies have been outperforming the NASDAQ 100 and the S&P 500. I'm sorry, they've been outperforming the NASDAQ 100 like the S&P 500 has, largely due to the January effect, whatever reasons. But again, to me, where the market's cheering this sector rotation, call me a glass half empty guy, I'm saying the leaders have stalled out. And I've seen this movie many times in the past. And so while cheer is being given to sector rotation, money moving into financials out of tech, maybe it is just healthy consolidation of tech with another leg up to come. It'll be simple. We pop up solidly above the trading range in QQQ, a solid and sustained breakout. We start undoing some of those sell signals that I've given you recently on the Mag 8 stocks, those that have triggered them. Yeah, absolutely, I can see that. And but that right now isn't what's happened, and so therefore, this is my preferred scenario. And this is a trend line here for a target for the small caps. That's going to be about a 12% drop to this trend line right here. I've also given this to you on IWM, including price targets. So what are we? Oh yeah, there we are. We have both 60-minute and daily. This is a 60-minute chart. Divergent high. There was a breakdown. T1, 2, 3, 4, the targets I've already given you. Daily chart, you can look at them there too. See the same targets right there. All right, what else? Let me go back to, not that. Got a lot of charts working here. Okay, again, I'm going just in order of I put them by date. Okay, Signet Jewelers. So keep in mind that whether or not you're in any of these short trades that we have, there's a lot of sayings that come up in the market and trading. And one of those is, I say in life, patience is a virtue. In trading, it's an absolute necessity. And so this is Signet. Broke down here. We hit my first target. And then what did it do? Look, those 200-day moving averages. I'm telling you, we've seen just amazing amount of stocks kissing these things perfectly. Again, more and more people, I think, are, and I know the algos do it, they'll buy the pullbacks to the 200s. But once the 200s are broken, that's lights out time, right? That's what happened after the 200s broke right here. It broke there, and it's not as if it didn't matter. There was a drop of 22.5%. So the stock lost almost a quarter of its value, then recovered them. Floundered around, tried to hold above them, couldn't do it, and once they lost it again, now this time the stock dropped 51%. All right, so we gave this one to you as a short here, breakdown back test. We hit my first price target quickly. Then we went down, we hit the 200-day moving averages. Sometimes I'll identify those as a price target, but when I put these trades out there, it's hard to see. I have pretty high degree of confidence. When I give you a trade, I have obviously enough confidence to make it an official trade, that those targets will be hit. But it's hard to foresee exactly how long it's going to take to play out. So therefore, you don't know when the 200s are going to come in. And you don't know whether they're going to buy the 200 simple like they did right here. See the red line? Or they're going to buy the 200, the red line's the exponential. Or they're going to buy the 200 simple, which is the blue line. I always say I keep them up on my chart because some traders like the 200 exponential moving average. Some like the 200-day simple. Therefore, I watch them both. And this was right now the one that needs to get taken out. If and when it does, we hit my second and then third. And then I will most likely make these official. When I say potential, it just means right now. That's all I'm looking for. That's all I was looking for when I first laid this trade out back in October. And these are potential targets that I will most likely increase it. Why? Because now look at this. We've already had, boom, boom, 2 successful tests of that 200, which helps to further validate it as a significant technical level. And so if we break it, I just showed you what happened when we broke it here and the time before. So that stands to reason we're going to drop more than just 7.5, unless it's just a quick whipsaw down below. So therefore, that would be about a 28% drop to that potential 5th target. All right, let's move on. I'm going to rifle through these a little quicker so this doesn't become an hour-long video. Again, just trying to update these both as updates for anybody that's in these trades, but also this is a great example of one that offers the next objective short entry will come on a break of the 200, as I just showed you, and then I think there's a potential for about a 27% drop from there. So consider it both an update to an existing trade as well as a trade setup with the next sell signal pending. All right, TOST. Here's one that I noticed triggered today. That's kind of what prompted me to do this video. I've been meaning to do an update on the trade ideas. T1 hit, T2, T3 right here. The stop now should be lowered. A lot of these, when I give you an initial stop, we've already hit T1, 2, 3. What do? We bounced off T3. And here's a great example, guys. Look at this. Let me turn off all the lines here. All right, so what did we do? We lost the 200s there. Well, and then we went down. We just hit my 3rd target, as I just showed you here. And where did we bounce to? We bounced back and fell just shy of the 200. We also, once we took them out here, this was the rejection right here. And now here's a stock that has flipped trend. This is easy stuff, really. It doesn't, and again, I don't mean to say easy. Like, sometimes these things don't work out. There's a little whipsaw down, back above. And the thing is, just recognize when you get these whipsaws, okay, well, it took it back and it's moving away from the 200s. So, I mean, not that we were in it there. I'm just showing you how well the 200s act. And there it is. There was loss there, rejection, rejection, rejection. So, you could have been bouncing. You could have took this profits on T3. I would never hold for a full back test. I always like, me, when I'm shorting, I will short a little shy of the resistance level. Enter the short on a kickback, but a little shy of the actual resistance level in case a trader step in early. And that's what they did. They saw here, it was clear that the 200s were important, and then they were shorting rallies back to them. So all eyes were looking at that. Longs were, whimpering, wanting to just get a, kickback to the 200s to get out. And the market doesn't make it that easy. And then short sellers wanted back in, so they shorted a little early. And then from there, the stock fell so far about 15, almost 16%. But again, the update is this is an objective short entry, hard stop. We just took out my T3 level after having what I call the initial reaction. That's why I list multiple price targets. Likely to get a reaction on the initial drop to it. Sometimes you can get multiple reactions. Bottom line is once that level breaks, it increases the odds you're going to go to my next target, and that's going to give you another 13% on TOST. Open, let's see. Open, you have to pull the archives. We probably shorted on that trendline break. Hit my first target here. Here, I'll move this over. T1 has already been hit. Probably like this. T1, T3. T3, we came very close, but there was a little quick earnings-induced move down through there. This is still T3, still the final target. Going to come in with the 200s now, and all we have to do is break T2, which is 558, and we're on it right now. Again, this is why I think this is a timely update, because a lot of my short trade ideas are poised for the next leg down, especially if the market goes away. I think it's going to go after earnings. And you know what? I'll just tell you right now. T4. All right. If the 200s get taken out, let me just write potential. I'll have to get an official update out, but either way, if you're in it, and again, that's, and what you don't want to do now is let a winning trade go into a losing trade. So you have a downtrend line right here. You can set a stop somewhat above there, maybe allow it at least on a daily close. Try to stay out of range of the stop raters. They'll go in, punch it through there to clear the stops, and then the next leg down comes. That's quite often the case. Lily long since stopped out. I haven't updated that. You had a shorting zone here, and I had stop recommendations up there, but it is setting up for the next leg down. So this one, and again, it's one that, yeah, we quickly hit my first price target. It was also recommended as a hedge to the Novo long that we have. And then again, where the stop was would have been relative to your price targets. In fact, if you shorted the shorting zone, where did we go? We went up another from the top of there 36%, but the bottom of that's 54. Either way, regardless, this should be moved to the completed trade archives. I will, but it's also setting up. In fact, it just triggered. See, here we go. This is the downtrend. 1, 2, 3 clean reactions and a breakdown right there, and with negative divergence. This is a divergent high that got burned through. This is a great example why divergence is not a sell signal, merely a condition. I must have marked it there, positive divergence, but we kept going up. And then what happened is once you take out the previous high, right, you have then a higher high, you no longer have negative divergence. So now this line goes away. I always say the charts are dynamic, and so is my analysis, meaning they're constantly changing. But that is a confirmed divergent high, and we're rolling down now, so that one looks good. CCL, Carnival Cruise Lines. If you read us up on social media, Google Walmart of the Seas. That's what they've been labeled, just because they have these. Well, you can read up on it. All right, so divergent high, T1 zone. We hit the top of my first target zone there. And now you have the update on this trade is, I'm trying to recall exactly where, I guess we shorted there on that trend line break, and it's the marginal new high that it put in there, and it made an equal high, was well within any reasonable stop using a 3-to-1 or better RR. 52% drop is still my preferred target. And now I like this one is I'm highlighting it as both a new trade setup, a re-entry, new entry. You have a beautiful uptrend line right here. Let me just extend my divergence lines over. And if it takes it out, guess what? Surprise bonus, 200 days will be taken out along with that uptrend line I just gave you. This one has a history of checking, clearing, popping through the 200s and recovering, but sooner or later it will lose them for good, like this right here. And then when it does, it's easy. You just short back and a new bear market has started, and that's what I see in the charts for this stock. That's why I have fairly aggressive targets calling for a drop of, and I'll probably add T6 down here to 11.15. But if it hits my fifth and final target, 51% profit, so or drop. So essentially, you double your money if you look at it that way. You short 100,000, you cover 50,000. That's basically you sold 100. And you had to, you bought the stock at 50. That's how that works if you drop. But I just count that as a 50% profit because you have to put up the capital up front. And then, yeah, that probably I'll just say T6 down here because I think this guy's going to give way. Added. I have to do this. I like to keep archives tight, everything accountability. Added 128. Video. Okay. All right, so the next screenshot chart will show that and just did not appear out of nowhere. All right, next up. CIEN. I haven't looked at this one in a while. Maxed up on a daily close above the recent high, so that hasn't yet been violated. We haven't yet hit my first target. Let's see, earnings, check your earnings, make sure you're not taking a position right in front of earnings. So we've got plenty of time in front of that one. And that's it. So I still maintain these three targets. We're about where we shorted it. It's not, it's just going sideways. It'll be about a 34% profit or drop if hit. All right, TPR. We shorted right here. We hit my second target, which was a mega support. Very, very much reaction expected there. You had a beautiful, super well defined, nice clean uptrend line. And you got it. Those beautiful 200-day moving averages just come in right there as well. And so that's it. And it just recently broke this trend line. The same, divergences that were intact when we shorted there on that first trend line break have only grown larger. In other words, they have not been negated. They've grown even larger, indicating a larger drop, which would align with my fourth and final price target, giving this one a potential downside from where we're at about 40% drop. So you give yourself a 10, 12% stop loss, and that's a very favorable RR if you take it here. It's already taken out the trend line, moving lower, or you can wait for it to break that 118.55 level there if you want. Visa, again, I've updated this one quite a bit since. This is another case of, you have to be patient at times. We shorted here, I guess, or here, one of those two breaks. We hit my first, second, third targets quickly, and then that set up this trading range right here, a lot like the stock market, if you will, a multi-month trading range. I updated this one recently when it finally broke below there, and it was a quick swoon down from T3. Remember, this is my third target right here. Quick swoon down. We hit my fourth target, and then we bounced, and we remained within the trading range. And I believe I just highlighted it for you here recently in recent videos. You can always check by just clicking on the V ticker tag. And now we're right back down to my fourth target, which is support. Was support before when we were way back here. It was a support level I saw us going to. We're below the 200s. And the fact that we had multiple reactions there and bounced further validates that. If I saw the support back then and the rest of the market didn't, they certainly see it now because we've had these major reactions. Those are major reaction lows, which the bottom line, that tells me that's a very significant level. So you set a price alert. If you go down through there, a solid break, especially a daily close, is going to increase the odds we're going to hit my next two targets, which will give this one an additional 10% drop. All right, FITB, Fifth Third Bank. That was trade back here. We shorted here. We hit my first and second target and then reversed, and that was also the 200. So that was a previous trade. We never made it to T3, but again, and then it went on to hit the suggested stop. So do you consider that a profitable trade? Absolutely, if you took profits there. Or do you consider a losing trade? Depends if you were holding out for T3 and you didn't take any profits and it was a losing trade. Either way, I gave it to you again. It's a new trade setup. Is that a bearish engulfing candle? Almost there. With new targets right here. And I'm just waiting for the regional banks to break. They're right on the line right now, as I've been telling you right here. This is the primary uptrend line. Big divergent high. Once the regionals break, fifth, third will go down with them. Birds of a feather kind of thing. Right? All right. So there's your four targets. I would have given these to you probably in a video, I guess, or maybe a static chart. January 16th. I created that. PEJ, it's leisure and entertainment. It's just a trade that's just taken a while to play out. We shorted, I guess that's my short entry there on that break there. I gave you a total of 5 targets with a profit potential of about 27%. We went as high as about 8 and almost 9. So right there within a reasonable, 3-to-1 RR ratio. Risk reward ratio, risk $1 to make 3. Divergent high, that line came across, made a double top, still divergent high. Again, these divergences, the indicators are making lower highs with prices making equal highs. And but we also hit, the key 200-day moving averages. Pavlov's dogs do what they do when the dinner bell rings. They buy drops of the 200s. And then what do they do when the 200s break? Well, they sell it. So that's what we need to do. Go down, take out the 200s. And in my opinion, that will sharply increase my odds. We're going to hit my final target down there. AGO. AGO is also one that's just kind of moving sideways here. We must have shorted somewhere in here. We hit my first, second, third, fourth targets, and then went just like the stock market in a big sloppy sideways multi-month trading range, almost a year long, but just recently put in a second divergent high. Again, watch, rinse, repeat stuff. Divergent high, 25% drop. Divergent high, 31% drop. Divergent high, 30. Oh no, I'm calling for a 30. It's just a trade that's still taking a while to play out because the stock market decided to go sideways and nowhere for a while. And so now what needs to happen, I colored it up today for you. We need to break out T3 as a level. Even though we already took it out once, it's acted as support again after T4 was hit. So we need to take that out. $80, 80.22. We most recently had this bearish rising wedge pattern here, and there's your sell signal on the breakdown, moving lower. Just took out the 200s. We'll take once it takes out 80.22. We've already hit T4, so my preference would be to sit tight unless the charts tell me to cover at that point in time, and then hold out for T5 for the prize. That's going to be a drop from where we're at today of about 19%, if we get that. SHOP, Shopify, we would have probably shorted on that bearish rising wedge break. Hit the top of my first target zone, bounced, remained below my suggested stop, hit it again just recently, which now, this time, you have an additional bonus here. Comes in with those 200-day moving averages. So it's very simple. We take out the bottom of my first target zone. It's going to open the door to the additional targets I gave you back then, which is going to be another drop of about 32% from where we're at, in addition to what we've already profited on T1. MSTR. Okay, I've given you updates on Bitcoin. MSTR as a strategy, formerly known as MicroStrategy. It's basically a play on Bitcoin, and I've given you my thoughts. Told you we're in a consolidation era. Expect a little bounce. We have positive divergence, but I still very much favor move down to my next target zone on both Bitcoin and strategy, which is going to be a drop of about another 30, another anywhere from about 30 to 37% drop. And then we'll have a divergent low, and we'll have it in Bitcoin. We'll hit my target. Remember my target on Bitcoin I gave you. I told you I'd get a little bounce first. We even went long on it. First, second, third target. We went long right on the lows. I believe it was that day. And then I told you it may go up to that third target in the 200s. I could easily see that. But I just decided we got a quick bounce. You know me, I like to sometimes shear most of the meat off the bone, especially if it comes quick. Get out, step aside. And this one just chopped around. And that's still my preferred scenario in Bitcoin. And that will also coincide with strategy hitting that final target I gave you. And then we can cover that and go reverse long. At that point, silver and gold will probably be blowing up. And then those folks, the doom and gloomers, and think that's a way around the fiat currencies, will probably start putting money back into crypto at that time. Carvana, being patient with this one. We shorted right here, sell signal on the trend line break. We hit my first target, bounced as expected, put in an equal or marginal new high, which was still very, very much a divergent high. You can see the divergence getting even steeper, the slope of the divergence line. That was a divergent high, as was that, with the divergence steepening. Again, you can see the slope of the divergence line. And nice move down today. So this is what you want to see after a move like that. And they haven't even reported. Looks like they're reporting on February 18th, if that's correct. This charting platform isn't always accurate. Check earnings.com or check the company's website. Either way, simple stuff. We need to take out my first target to open the door to my next targets. And if so, that's going to be a drop from the recent highs of about 51%. So again, should be a nice short trade. FHN, First Horizon, just stalling out here. It needs to take this level out, 2364. To hit my first and second targets that I gave you, and I very well may add additional. Let's do potential T3 as per the 128 video, and then again, when the regionals buckle, when we get that sell signal in KRE, I'll probably do a video and give you the top picks in the sector. And again, guys, if you're still with me, we're almost done here. There's only one more. I'll update the longs next. Until this market makes a clear choice or decision or definitive break on the recent trading ranges, it can go either way. I'd be a fool to tell you otherwise, right? XRT, retail sector, hit all 3, we had 4, but then we covered all on the April 6th lows for the reasons stated at the time. Before taco was a thing, that was my prediction that Trump would cow down on those tariffs, and they did, and the market exploded, and it's been nothing but a bunch of tacos since. What is this? New targets. That was the last trade. I'm sorry. This short entry there, bearish rising wedge break. First target zone hit. This is still T2, 3, 4, 5 zone. And we've come full circle now. You have a nice clean up trend line, even bigger divergence. Remember, we had a bearish rising wedge here and we shorted it, went down, hit my first target zone, went to hit the 200s. Again, it's those 200s. If I don't mention them, just know that most stocks and sectors, this is a sector ETF, the retail stocks, they'll buy the 200s and like nobody's business lately over the last year. You know, a lot of, it's well documented. The Robin Hoods of the world and Schwab's, it's the biggest engagement in history, I believe, of retail traders, even before the 90s. And that's evidenced by the surge in the FINRA margin debt. There's a massive bubble right now, and that market will correct. It will not continue to make it easy for those folks. They're going to engage the market as long as it's, you know, the stock market's holding up. But I think there's a lot of frustration now lately because the market stopped going up as a stock picker's market, and the majority of those retail traders don't have the skill sets to successfully do that. All ships are lifting a rising tide, you know, and there's one of the favorite sayings. I didn't come up with this one, but I love it. Never confuse genius on your part with a bull market. And I think I know a lot of traders do. And then when the market becomes more difficult to trade because of the, you know, like I said, sector rotation and all that, that's where they start losing money, the retail crowd, and eventually they will give up. So, and then that's going to be the next leg down. So that's it. Still have these targets. We hit my first target, made a marginal new, and still divergent high. And there's a lot of potential there. And that's, you know, that's going to jive with the economy slowing down. You're not going to see the retail stocks drop, the whole sector drop 30%, or from the highs more than that, without a significant slowdown. And if you're wondering where it's coming from, because I know there's about close to zero, about as close as you can approach the number 0 to the number of economists that foresee a recession. Most are calling for a really nice 2026. What if nothing else, a catalyst will be if the stock market drops. That will be the reversal, and it will finally break the consumer. Housing market's already peaked by most metrics, most areas. Prices are coming down, but not crashed, just coming down. And the other big component is stock market. So either way, it's technicals, guys. This one's broke down. It's on a sell signal. That's it. I can't add any more. This is your first support level, or really target right now. It's still T1 zone. Never mind. It's still my first target zone and the 200. So once my first target zone gets taken out, the 200s are just below it. And then once they go along with it, then yeah, that's going to increase the odds of T2. I'll tell you what, right now, this really should be the next target zone. I'm just going to leave my targets as is to keep it simple for now. But I'm just going to tell you, if you're looking to, you know, if you short them and you want to get a quick buck, we'll probably come down here, about 11-12% drop, and then down to the bottom of that trading range, about 77.30 or so. All right, that's it. Those are the official short trade ideas. Again, not all inclusive, far from it. If you have any questions, want a chart opinion or request, an update to any other trade, just post it under this. I will, when I get a chance, also do an update on the long trade ideas as well, because there's plenty of those. In fact, there's more long trade ideas on the site, and have been for a while, than short trade ideas. So that'll come next. All right, this has been Randy Finney with Right Side of the Chart. Have a great day.